Okay, let's go over this again. Going over to the daily time frame. What the price do today? Something very simple and short that will not kill me. If I should do this every day, it's very interesting, very fun, and I can make it simple and short. The human mind, our own limitation. So I graded the premium weeks today on the daily, expecting higher prices. Since we're in all-time high, it's better to continue to expect higher prices till proving otherwise. I marked out all the news for today, for that yesterday. I'm reviewing yesterday, Tuesday, 3:30 high impact news, 4:30 a.m. high impact news, and 9 o'clock, 9:45 a.m. high impact news. I would like to see what happened this 9:45 a.m. high impact news. Yeah, is it high impact news? Where is it? Okay, yes, it's high impact news. Now back. So on the daily time frame, as seen, this was where price closed the previous day. It opened a little bit above it, went up, then came down. Price moved to the upside and then began to drop down. Well, I saw this in the morning. It had already dropped to the downside. It came up and then started coming back down again. That is what I saw in the morning. Now it's now looking like as if it just went up and came back down. Funny. So spends 1 minute on daily time frame. Down into the hourly. Let's see what happened. What happened? What happened? What the hell's going on? Yeah. What's happening with this thing? It's misbehaving. Okay. So now grading that premium week. Where is midnight opening price? Very, very important. This is the midnight opening price. Midnight opening price, what the price do? Price dropped to the downside. I said it. It first dropped to the downside. This is the first fixed sell side breakout. And then I'm talking from the. Thank you. Bye bye. First drop to the downside and then went to the upside to take out stops. This first drop is a trick, a manipulative trick to trap traders short into that rejection block. I'm looking at mostly. Well, I've said I'm looking at the bodies of the candle, but the bodies of the candle look. Yes. Okay. Doesn't matter. Well, how I see it is that price does not need to drop below this low before I know that traders are chasing it short. This drop alone is enough. So price came back up and dropped. And price created an intermediate term high here. A higher low, a low to the left of it, and a high to the left of it, and lower high to the right of it before dropping down. Then displacement, then price left a breakaway gap and began to drop. Let's drop on the 15 minutes. Look at how price came up, retracted, came up here, failed to touch the upper quadrant, dropped, came back up like staircase, like seen a staircase. Failed to touch here, whip through it, that is allowed, no problem. Failed to touch the upper quadrant again. All these are bearish signatures. See how the candles are staying below the upper quadrant. And then price broke down again, breaking below this low. That's some kind of bearish market structure shift. And then came again, failure for the bodies to even go above the consequent encroachment of that daily weak gradient. Do you see? That's clearly bearish signature and then dropped explosively. It has found sensitivity here. That's no joke. That's not something to joke with. And then 15 minutes. I've removed my Noel's hub here. Yeah, whatever. So then what happened again? Look at our intermediate term high here. A lower high to the left of it, an even lower high to the right of it than the one at the left of it before price dropped down and began to spool to the downside, reaching for these lows, drop down, reaching for these lows here, and these lows here. Look at that perfect delivery to this low, to this 7 o'clock low, leaving that low intact. That's clearly a trap. Look at that. It's clearly a trap. This smooth lows here, traders will think it has found resistance and is about to start going up. That's what they would think. But ICT traders, smart money, are looking at this as sell side business has not been finished. And price came back up. Also to drive against them. Also to drive against people who have sold here, thinking it's coming to form a breakout. And at the same time enticing them to go long. See this, buy breakout, enticing them to buy the market, and then dropped and broke all their hearts, ripping them to shreds. Yup. And from the 15 minute, I just dropped straight to the 1 minute. The 1 minute time frame showing us. The news, that 9:45 a.m. news that I wanted to see. The news release. So 9:45 a.m. what happened? It's even 9:30 that was misbehaving. See how the 9:30 was very volatile and all over the place. Spiky movement. Hit the consequent encroachment. Look at these movements here. Anybody who was buying or selling here was ripped to shreds. So then it tapped the consequent encroachment, failing to tap the high formed during macro. This is a macro here. Failing to tap this high. Failing to tap the high formed during macro. And then began to spool to the downside. Despite this movement, it is not a coincidence that price came, spiked through here and failed to hit this high. Why did he fail to do so? Why would he fail to do so? ICT concept really works. So, and then it began spooling to the downside. 9:45 a.m. news, what the price do? There's a fair value gap after the bearish market structure shift. Price came back into it, displaced again, leaving a even bigger, bolder fair value gap. Came to it, failing to even touch the consequent encroachment. That's bearish signature. And then drops again to the downside, leaving relatively equal lows. And price came back up, hitting the consequent encroachment this time around, taking out this high here, and then the enticing longs there, and then it began to break to the downside, going into launch macro. And yeah, that's where I'll stop.